Hello everyone, today is Monday the 23rd. It is Thanksgiving week. I am Marcus Bickle. This is the Naples Money Managers News You Can Use, and I am joined by Dennis Nelson and John Kincaid off the screen. I hope everyone's doing well. It's some mixed news. We have another vaccine, which looks like that's more good news on that department.
It sure is.
We also see, obviously numbers rising in various parts of the country. So all I can say about that is just be safe out there. It feels like we're in the home stretch insofar as this goes. We have an end in sight with these vaccines and possible treatments. So just be safe, enjoy a good Thanksgiving with your loved ones. But like I said, be safe. Other than that, we're looking at probably a fairly quiet week in the market, wouldn't you say?
Usually is. Usually is. A little more going on out there than the typical Thanksgiving week, though.
Absolutely.
With all the virus and vaccines, like you mentioned. Exciting times, exciting week.
Yes, as there's I think I've said this before during this show, but there's a very famous insult, and I believe it originates in China, unironically, that says, "May you live in interesting times." And if nothing else, we definitely have lived in interesting times for this past year. But we're in the home stretch. Now, one last thing before I turn it over to Dennis. As it is Thanksgiving, we will have some reduced in-office hours. Now, we will be still open, we will still be reachable. It's just in-office will be limited the Friday after Thanksgiving. So just as a quick heads up to everyone, if you are looking to reach us, you can reach us by phone. And I'll turn that over to Mr. Nelson.
Well, one thing I thought I'd talk about, since the market seems to be in uncertain times, is the safe haven stocks. Typically, when we look at safe haven stocks, we talk about utilities, food stocks, staples. But that environment seems to be changing, and the definition of a staple stock seems to be changing. Really good article in Barron's last week pointing out something that we've noticed here too, and that is when the market gets a little rocky, different type of stocks seem to be doing better. Talk about some stocks. How about Facebook? I mean, that is everywhere. 1.8 billion people get on Facebook every day. Now, is that amazing? So how staple can you get? And on top of that, it's free. Or at least it doesn't cost us money.
Right. No, absolutely.
there are costs.
And to put those numbers into perspective real quick, now everyone likes to bat around the whole, like we're coming up on I think 8 billion total people worldwide, but there's only estimated to be about 4 billion of them online. So 1.8 billion of those online users go to Facebook every day. I think that was important to kind of highlight there.
Yeah, that's just an amazing fact. But another stock that seems to be everywhere, of course, is Amazon. That has become a staple in this new world that we're in. How about Microsoft?
Oh, absolutely.
Maybe if their Microsoft wasn't out there, there'd be another operating system. But right now, it is the operating system that we all interface with.
And I'm sure parents and grandparents out there are going through the struggle right now of trying to find the latest Xbox Series X for their grandchildren, which is just showing record levels of both sales, and no one can find them apparently. They're going for like 3 times MSRP markup.
I hate to say it, but I'm not even really sure what that
well, that's okay.
Looking at some stocks that are candidates for the same type of staple stock that's really a tech stock, but a staple in disguise. How about Netflix? Replacing a wide swath of TV and now theaters. How about Zoom?
Oh, yeah.
Uber? There are a lot of companies coming up with a formula that will put them in the staple category of one that we'll soon regard as something we need. Peloton. How's this for an example? claims they have 1.3 million subscribers. That's just been starting over the last 3 years, and where is that going to end up as we spend more time at home? I know I've got a little gym now in my home.
People talk about that as the death of the gym, the public gym as a whole.
I can see it.
And another big piece that's coming out in the next couple of weeks, DoorDash, and the food delivery services that we all see, they're about to have an IPO. And to kind of show you what Dennis is talking about, this new world we're kind of entering in 2019, DoorDash had revenue of like approximately 150 million. For 2020, it's going to be in the billion range, I think, to the 1.5 billion. So that's 100 times like earnings. Like, it's ridiculous. They're explosive revenue growth. Now, some of that can be expected to change once things return to a semblance of normalcy. But I don't foresee people stop ordering like they did. Maybe a little bit less, but it won't stop entirely.
Well, Uber is a good example. Their sales were down because of the COVID problems that would be affected in their cars, but only down 17% the third quarter.
Wow, that's actually
so that's not a disaster.
It's not a disaster.
No.
So yeah, like Dennis said, we're entering a new maybe a new phase in this economy, and I think I've said it, Dennis and John have said it many times during our show, that this has kind of accelerated the change in what will be staples. It's no longer JCPenney, it's Amazon.
Exactly.
Well, thank you, sir, and I will go ahead and bring
on John.
Mr. Kincaid.
All right.
What you got for us today, sir?
Well, I'm always interested in what I see advertisement-wise in the literature that I read, because it's supposed to be aimed at me, right? So I take the Wall Street Journal, have for 30 years, and every Saturday in their issue, they always have a magazine. And it's interesting that this Saturday they had an ad in the magazine from a great firm, one of the top global investment firms. But what struck me was the headline here. And the headline is, "Will the world always be this unpredictable?" Talking about what's gone on in 2020. My question was, when I first read that, when hasn't the equity or bond market been unpredictable?
Sure.
Right? And that's why there's such a challenge to manage investments over a period of time. I mean, that's really a challenge. The second piece of this is, will my portfolio weather the storm, and how can I be sure? Those are all great questions, and my answer to that is the enhanced dividend fund that we run here at the Naples Money Managers, which is our core focus. If I take you back to something that is similar, the objective is the same, yet is made up different. There's a company called Bridgewater, which is one of the most successful hedge funds in the world, founded by Ray Dalio and some other people.
Legendary investor,
and they run an all-weather portfolio. And I looked at the all-weather portfolio this morning to see what it was made up of, and it's made up of 55% bonds, both short bonds in maturity and long in maturity, 30% stocks, and some commodities and gold. The idea here is that whatever the market brings on, this can produce a stable return.
Okay.
And it's engineered through a lot of different ways in the logarithms. That's what they do. They use mathematics at Bridgewater. He made a comment. He said this is Ray Dalio's comment: if you can't successfully do something, don't think you can tell others how it should be done. And I think that's a pretty fascinating statement. And what I want to take from that is, we have something that we can share with others, and it's worked over decades.
Absolutely.
About the same period as the all-weather limited partnership at Bridgewater. But if you want to get things more predictable, our template that lays over common stocks helps to produce that predictability.
Well, because we're dealing with constants, right? We deal with the dividend and
Right.
everything. We can measure that without dealing with the appreciation of the stock.
Right.
Well, everyone, thank you so much. This is Naples Money Managers with news you can use. And remember, money matters, but most importantly, you matter. Thank you so much.